Welcome back. This past week in Web3 wasn't just another round of hype and headlines. No, we actually saw some major structural shifts happening, kind of right under the surface. Okay, let's dive into this.
It's a question we hear all the time, right? Is this whole thing actually evolving, or is it just getting weirder? Because on one hand, you see total chaos, but on the other, you get these glimpses of a whole new digital world being built. And that's exactly what we're going to break down. We've zeroed in on 4 key signals from this week that, when you put them all together, they paint this really clear picture. An ecosystem that's, well, it's growing up, and it's doing it fast. So first up, there's been a massive shift in the on-chain derivative markets. And what we're seeing is a fundamental change in how traders are even thinking about and interacting with crypto. $90 million. Now, that's not some protocol's valuation. That was the trading volume for options on the Derive protocol in a single day. And that number tells a really interesting story. So why does this matter? What's the big deal? Well, this is the first time this has ever happened. It really marks a structural turning point for on-chain markets, a major shift in who's even playing the game. Okay, so here's the difference in a nutshell. Perpetual contracts, or perps, are basically just straightforward bets. Is the price going to go up, or is it going to go down? Pretty simple. But options are a whole different beast. They let you trade on volatility itself, how much the price is going to swing, no matter which direction. This is a way more sophisticated tool for managing risk. It's the kind of thing you see in, grown-up financial markets. And this really nails it. What we're witnessing is a big transition. The game is evolving from simple speculation, from just guessing, to complex risk management. And that means more sophisticated, probably more institutional, players are stepping onto the field. All right, on to our second signal. So if the financial tools are getting more sophisticated, the next logical question is, who's showing up to use them? Because the battle for stablecoins, it is no longer just a crypto-native thing. The giants are officially in the arena. The fight for stablecoin dominance is heating up like crazy, and the new players coming to the table are some of the biggest names on the planet. I mean, we're talking about payment titans eyeing up their biggest rivals in massive acquisitions. And even social media behemoths planning their big comeback. I mean, come on. When you see these names making these kinds of moves, you know the entire game has just changed. Just look at what's happening here. Stripe might just buy PayPal, which would create an absolutely massive payments company. You've got Meta, after their first try, gearing up for round 2 in the stablecoin space. And even the OG, Tether, is investing in payment infrastructure to protect its turf. So, what does this all mean? It means the war is shifting from being about technology to being about distribution. It's not just about who's got the best blockchain anymore. Nope. Now it's about who can get their stablecoin into the hands of billions of users. This is a whole new ballgame. Okay, for our third signal this week, it's not just the companies that are evolving. It's the very idea of a worker. We are seeing autonomous agents go from being simple little tools to becoming actual economic players. And it is happening way faster than anyone thought it would. Just check out this progression, and this is all happening right now. An AI agent got a literal job offer from a billion-dollar protocol. For real. Another agent is just out there managing investment strategies all by itself. There's a platform with over 1,500 agents earning real, continuous cash. And now, they're even starting to control things in the physical world, like robotics. This isn't science fiction anymore. This is the new reality of work. And this right here is a huge conceptual leap. We've moved past thinking of these agents as just assistants that do what you tell them. They're becoming, well, employees. They can make their own decisions and carry out complex tasks to hit a goal. This is fundamentally redefining what a team or workforce might look like tomorrow. And for our fourth and final signal, we're seeing this theme of maturation hit even the oldest player in the game, Bitcoin. A super aggressive new competitive strategy has popped up. And you know what? It looks a whole lot like the playbook that built the Web2 tech giants. Yep, you heard that right. The biggest player in Bitcoin's ecosystem just flipped a switch and made trading Ordinals, runes, and BRC20s completely free. Now, those are all just different ways to create assets on Bitcoin, kind of like NFTs. But this isn't just some weekend sale. This is a strategic declaration of war. What we're seeing here is the classic Web2 strategy being deployed in Web3. The goal?
market capture, whatever the cost. By slashing fees to zero, Unisat is basically burning cash to grab market share, and that puts an insane amount of pressure on all the smaller competitors. The likely endgame? Consolidation. We could end up with an infrastructure market run by just a handful of huge players. So, with all these massive shifts happening, what's coming up next? Let's take a quick look at some key dates on the horizon that show these exact trends are just going to keep accelerating. So keep your eyes on these. On March 6th, that whole AI agent story continues when OpenClaw's trading challenge ends. Then, on the 9th, more agent infrastructure comes online with next year's TGE. That's their token generation event, basically a public launch. And on the 14th, that market maturation we talked about gets another big boost when Pendle's new staking upgrade goes live. See, these aren't just random events. They're the next chapters in the stories we've been talking about. And that really is the big question to leave you with, isn't it? This stuff isn't just about technology anymore. It's about markets growing up, new types of competition, and even a new kind of employee. The signals are crystal clear. Web3 is maturing, and it's changing the rules for all of us. Thanks for tuning in.